We've been quite busy, active, particularly in the Eurozone markets. Overall, from a bigger perspective, we find that today you just can't be a micro player, you've got to be a macro player. You almost today need to be a political analyst and an economist to make your investment decisions, be it in real estate or anything else. So
do you need to have the view that many of our guests have that Europe is right on the cusp of a rebound?
I don't know that it rebounds as quickly as people think that it's going to rebound, but I certainly think that the currency wars, and they're winning right now, that currency war by devaluing the European and the euro in particular, currency is going to benefit disproportionately exporters from that zone. And I think as a result of that, whether it be export businesses, tourism-related businesses, it could be retail, hospitality, et cetera, are going to boom. I think that the hotels across Europe, for example, this summer, I expect and project the numbers that are going to be staggering in terms of the increase in visitors there, as opposed to countries that are losing the currency war, so to speak.
Not to mention there's a huge discount on the property if you're taking American dollars and driving into the property.
For sure, you get a double benefit. Even to buy a home in Europe today, if you think about it, you know, if a home cost you $1.5 million a year ago, today it'll cost you, call it about a million today. So the value there is tremendous. And I think that Europe is one of the flight to safety markets that has also gotten the discount. What I mean by that is there's so much political risk all around the world today, whether you look at the Middle East, you know, Shiite Sunni wars going on there, civil unrest in certain countries, political mismanagement in markets like Brazil, and people are looking for a place to put that capital. They look at the United States and Europe probably more than ever, both of those two markets, as the one safe haven. As I call it, today's real estate is yesterday's gold is like today's real estate.
Do you leave money over there?
I do, but I don't leave capital there, because I'm still an American, I'm spending US dollars, so there's always that extra risk. But to a great degree, I say yes, more particularly of late. When the euro went down to 1.05, 1.06, we shifted.
But I mean, do you have a tax problem repatriating?
No, there's all types of structures
with real estate. Because we had the United Tech new CEO on it. There are people that are, you know, they're happy to leave large sums of money over there, and they use it as a kitty to do foreign acquisitions. They won't even try and bring it back. You
know, beforehand, I would say that folks like ourselves were a little bit more afraid of that. Obviously, with euro down so much, we look at it also as an investment play. We sort of viewed it at 1.05. We had, you know, not as much downside risk, obviously, as last May when you had 1.40 to the dollar in terms of euro exchange currency. Overall, I don't expect great boom times in Europe, but I do believe that, again, they're winning the currency war and the weakening.
And you like Turkey and Greece, too, huh?
We're folks that will go to where we view opportunities. Right now, Greece is a market that's been beat up. It's sort of the same opportunity we saw in Ireland before or in Spain before. And we're always looking for where that next opportunity is, where people are undervaluing the market. And Greece, obviously, is probably one of the most beat-up places in the world, but still a safer market than investing in, say,
nice if you could buy in drachma, it'd be even cheaper.